Hello traders, Corey Much here with TradeThatSwing.com. Got asked to do a video on the Relative Strength Index. So this is going to be a deep dive looking at how it works, when it doesn't, understanding the readings it's giving us and how it's coming up with those readings, typical ways people use them, and yeah, we'll kind of look at, very briefly how those methods perform. And then I recommend don't just read an article, watch a video, go through your charts. Anytime you're going to add a technical indicator on and you're thinking about using it, go through a bunch of charts, see how the indicator moves with price, get a feel for it, decide, is this a profitable way to be able to trade? Don't just look at the select examples given. Go find many examples. Find where it does work, where it doesn't work. So let's look at the basics. Developed by Wells Wilder. This is the formula. You can see there's not much in it except for this RS, which is average gains divided by average loss over a selected period. 14 is usually the default that it'll give you, but that can be changed. You can choose 2 periods, you can choose 10 periods, you can choose 50 periods. The smaller the number of periods selected, the more kind of choppy it's going to look. It's going to get much more smoothed out over longer periods. So it's going to depend on what kind of trader you want to be. If you want very quick signals, then you'd want a shorter default selected period. If you're more an investor, then maybe you'd go to 14 or 20 or 30. You could try out sort of different ones and see what kind of signals you get that work well for what you're doing. The indicator moves between 0 and 100. It will not go below 0 or above 100. A value of 0, extremely rare, means every period over the last 14 periods was a loss. Because, the formula is calculating gains, adding them all up, so basically close to close, and then average losses, close to close, adding both those up, dividing them. So you basically have no losses, and so if you just got to 0, that means you had no gains over the period, so it was just all losses. So you'd be right down at the bottom of the indicator's range. If you had all 14 periods that went up, then you'd have a value of 100 right at the top of the range, because there's no losses included in the calculation. So if average gains are higher during a period, then you're going to have the RSI above 50. And this is not taking start to finish. It's just looking at each individual value. What was its gain? What was its loss? Adding those up during the period and doing this. So just be aware of that. It's not taking the starting point and the end point. Are you up or are you down? No, it's taking each individual candle. What's the gain on each candle? What's the loss on each candle? Doing the math that way. So if average gains are lower, then your average gains are lower than your average loss, then your RSI is going to be below 50. So it's going to be, the more lopsided it is, the closer to 0. And same with the average gains. The higher the average gains relative to the losses, you're going to be above 50, and the more lopsided it is, the closer to 100, as we looked at here. 14 periods up, you're going to be right at 100. So the kind of closer you get to that, the closer you're getting to 100. When they're more equal, average gains, average losses over a period, you're going to be closer to 50. So one of the most common kind of things discussed with the RSI indicator is overbought and oversold. They do not indicate that the price is too high or the price is too low. That's a common misconception. If we just look at that math that we just talked about, all it's kind of saying is that if we're in that upper quadrant, it means we've had more gains in the last 14 periods than we've had losses. So it does not indicate an imminent reversal. Just looking at a few charts, we'll be able to quickly see that when it gets above 70 or below 30 does not mean it's time to go short or go long, respectively. So overbought just means if average gains over the last 14 periods are much larger than average losses, you have overbought. If average losses are much bigger than average gains, then you're going to have an oversold condition. But again, that does not mean a reversal. I think that's thrown out there when people say such and such a stock or whatever is oversold. I think there's a lot of people think like, oh, that means it's going to go up. No, it is simply a condition of the indicator, but is not necessarily predictive of what price will do next. I personally view these as almost useless in isolation, like just because the price got to, or the RSI got to 70 does not mean we're going higher or lower or anything. It just means average gains are bigger than average losses over the last whatever period you're using. But there are other ways we can use it, so we'll discuss those. But let's just look at overbought, oversold. I just have a SPY chart up here, S&P 500 ETF, just because, you know, it's basically a culmination of many different stocks. So if you viewed these as, you know, oversold, so I have this set so that it's 70 on top of this kind of purple box, 30 at the bottom. And this would be the full range, 0 down here, 100 up here. You can see the S&P 500 does not climb too much into extreme territory toward the 100 or the 0 very often. More caps out, kind of it trades mostly in this range between 70 and 30, or the overbought, oversold range. But when it reaches 70 is not an indication to necessarily sell. As we can see, it reached 70 here, stayed up there, pulled back, got back up to 70, oversold. But this whole time, it's riding that line of 70, and it's still just going up. Was 30 a time to sell or buy? Potentially during this period. And that'd be something you'd want to look at. We're going to discuss that. Ranges that certain stocks trade in, or ETFs. And we can see, yeah, this one does tend to move between about 70 and 30. So you could look at potentially buying during those times, but it's not definitely flawless. Look at here, it got to 30. That was just the start of the downtrend. So yes, you maybe could have picked up a short-term trade, but you know, it's just hitting 30 over and over and over again as the price continues to drop. Same as it was doing up here, hitting 70, 70, 70 over and over again as the price continues to rise. Here we can see what I talked about in the first slide. When you have very quick movement or lots of upside days, you're going to get very sharp rises in the index. On SPY, like we said, we're usually not going to get 14 days up in a row, extremely rare, or 14 days down, so we're not going to get that 100 or 0. But if we can see in this period, there were mostly up days, one little down day, maybe a couple where the average gain and average loss were pretty equal because there are a couple flat days in here. But you can see the RSI rises very quickly because average gains start outpacing average losses very quickly because it's just all upside days. The same thing happens over here. We have a couple little green days, but it's mostly red, especially through this section. And you can see the RSI falls off quickly. When it's more equal, so you can see the price is rising here in this area, but it's more red candle, green candle, little up candle, little red candle, little green candle. It's, you know, definitely more, it's not as lopsided, and you can start to see it starts to drift more toward the 50, even though the price is going up and the RSI is more choppy. That makes sense if you understand the indicator, because Average gains and losses are more equal. Whereas over here, they're spreading out. Average gains much bigger than average losses. Average losses much bigger than average gains during this period. So you have the sharper movements. And this is important to be aware of because it's going to play into some of the quirks of the indicator and why we'll sometimes get false signals with divergences and stuff like that. So let's get to those other ways we can use the indicator. So just overbought, oversold, I'm not too terribly useful in my opinion, because in a downtrend you're just going to be continually hitting that 30 area going down, price still dropping. It's not necessarily an indication to buy. But hey, if you look at your charts and you find a way to use it that way, then by all means do it. So a failure swing is, I guess, a step up from just viewing overbought and oversold levels. So you're going to use those levels, but the price or the RSI, you're looking for a couple extra things to happen. So in the first case, RSI goes oversold. It drops below 30, then it moves above 30, pulls back, but it stays above 30. So basically it went into oversold territory, it bounced back up into not oversold, it dropped again. This is all the indicator, not the price. Drops again, but it stays above that 30 level and starts to move back up. It's a potential buy point, according to the indicator guy, Wells Wilder, when it takes out that swing high that was just made in the RSI. This may indicate the price is bottoming. Again, I am not endorsing any of these methods. I'm simply telling you what is out there and how you can look for them, and then you can verify them for yourself and see if you want to trade them. And the opposite would be the RSI goes overbought. It goes above 70, drops back below. On its next move up, it stays below 70 and then starts rolling over. And the shorting point would be when it drops below that last little thing on the last pullback on the RSI. So we'll look at a couple examples. Failure swings do not occur on every bottom or on every top. False signals occur when the price moves from strong movement to choppy. For that reason we discussed, we can get these really big readings when price moves quickly, but when it starts to slow down, you can get some chop, which does not necessarily indicate a reversal or anything. It's just the indicators tracking average gains and average losses. And if you go from an extreme situation to a more narrow price range, or where candles are a little bit more equal to each other, gains and losses, then you could end up with these signals occurring, but not because it's a bottoming or a topping. It's simply the anomaly of the indicator. So let's look at, we'll just pull up SPY again. So let's look for a situation where the price went below 30, stayed above 30. Okay, so here we drop below 30. Then we move above it. This one drops, this one does go just slightly back below 30, so that's not an ideal example. Here's one, we go below 30, boom, big rally back above it. Now, this pullback stays above 30, and then it moves above that swing high. So that would technically be a buy point right there. You're buying right at the high. Not an ideal buy point. Let's say even maybe you skip that one. So you have this high point, the price drops back down here. So then your buy point's like basically that swing high. So you'd be buying in back over here. But this would be the first one. And let's see if we can find one more. This one, if this little pullback had stayed above 30, then your buy point, the swing high was right here, so you'd be buying right about there. Fairly close to a bottom in that case. But yeah, you're just seeing this like move into oversold, price moving up, staying above Let's see if we can find one more. This one looks very close. Drop below, move back up. Again, this one gets, covered up the price action there. Big drop, moves up. It is holding the 30, but notice the price is continuing to drop. And yeah, holds near the 30. It does dip a little bit below it, but your buy point would be this here. Or potentially that one. There's like this little hiccup right there. So depending on how aggressively you traded these, it pops up, has a pullback. So you could have a buy point right there, which is right as the price is accelerating into its down move. Or if you happen to miss that one, you could use this, you know, the price moved up here and then pulled back to the 30. So you could use this as a buy point, which would get you in there. And that's a good one. So you can see it's kind of, some of the signals are good, some of the signals not so good. You could test it out in individual stocks too if you're, you know, maybe you're not trading SPY, maybe you're more of a Bitcoin person or a gold person. Try it out in that specific asset. It might work better. You might also have to tweak those levels. Maybe in a certain stock, which is more volatile, you might have to use the 20 level instead of the 30, and that gives you better readings. Yeah, so play around with it. Don't take simply because some guy said, I can't remember when the RSI was introduced, but it's been quite a lot. It's been a long time. So just because someone 50 years ago said the RSI was useful this way, they may have only been looking at a specific asset, a specific time frame. So yeah, experiment with it. See if there is a way to potentially make these failure swings work for you. Let's look at a short. So move up into oversold, so above this purple line. Drop back in below oversold, rallies back up. So now you have a swing low here. Rallies back up, stays below the 70, drops. So there you have an entry point right there. In this case, once again, not very good. You'd be selling right as the thing is ending. What about this one? Move up into oversold, drops. So the low of your swing low is there. You get the pullback, definitely below 70, drops again. In this case, you're shorting right there. That's a decent one. So that's how failure swings work. You would probably want to also add in some other criteria. You could look at the price action. You could look at the trends. Maybe have some other indicators, or I just trade off price action. I prefer it. So you might want to add in some additional rules to help filter out some of these not very good signals. Because as we discussed, there will be just anomalies that happen. When you have a sharp move and you move to more choppy trading, you're going to get signals. They're going to move, right? Because we discussed this. You have a sharp move here, and then you have some choppier trading. What does that do to the RSI? Even if price continues going up, it's going to move more toward the 50 if most of those candles are very similar sized. Your average gains and average losses equal out. That's going to push it closer to 50. So you're always going to get this push on extreme moves, and then if it gets choppy, a move back toward the 50, which means back out of oversold. So you're going to get these readings just based on strong move into chop. Now that can be good. It can tell you maybe to get out or something if you're long. Yeah, just be aware of how the indicator works. So let's keep going with that. So we discussed the failure swings. Divergence, another common one. So bullish divergence, price is moving lower as RSI is moving higher. So that's a bullish divergence. That indicates, hey, maybe there's some underlying pressure here on the price. Now, if you understand the indicator, you can also understand how it can give you anomalous readings. So again, price is dropping, but the RSI is starting to move up. And typically you're going to be looking at lows, I guess, right? Because if you see the RSI going up, You could look at, is it making higher highs? Is it making higher lows? And price is making lower lows and lower highs. So you can kind of look at either one of those and see, okay, we have lower lows on price, we have higher lows on the RSI. And a bearish divergence, this would be the price is moving up, but the RSI starts moving lower. So it starts making lower lows, lower highs, while price is making higher highs, higher lows. This is traditionally used for reversals. Best to let the price action confirm. As we discuss, if you have a big up move on price, what's going to happen if it gets a little choppy? Because the average gains and average losses start evening out a bit, you're going to drop off that high and start moving toward the 50. Now, it might still stay well above 50, but it's going to be below that. And if the price is kind of choppy, but it's still moving up, you're going to get a bearish divergence, but the price still could continue to go up for a long time, simply based on how the indicator is calculated. So just be aware of that. Divergence does not occur at every top or bottom. Oh yeah, and I made that point just to say, watch the price. That's why I like using price action, because if we're making higher lows and higher highs, then once we start making lower lows, lower highs, it's like, okay, start looking for X. Now we're in more of a situation where we can kind of verify, okay, there was some divergence, and now the price is actually starting to move in a way that confirms that. And then you have to consider, how are you going to take advantage of that information? How are you going to use it? Where are you going to put your orders? And yeah, we already discussed the problem. False signals occur when price moves from strong movement to choppy. So we could pretty much look at some of those examples of the failure swings in a way, but let's find a couple others. Here is a big bearish divergence. And pretty much the same situation we talked about before. So you go from very much stronger upside movement to a little bit more choppy movement, and we get a bearish divergence. So ultimately, yeah, the price did end up dropping a bit over here, but you have probably your first divergence right there, right? Price moves up just slightly compared to this area, and you have a pretty steep divergence. Why would that be caused? If you understand the indicator, notice these big green candles, and then you move to a lot of tiny candles over here. So that's going to create a divergence, but it didn't necessarily indicate the price was about to reverse anytime soon. Then you can, extend it out, and the divergence kind of keeps occurring. And yeah, eventually there is a drop, but just be aware, this was not a good timing. We would have, if we took these initial divergences as, hey, the price is going to reverse, not only would we have missed this entire rally, but potentially you would have been, losing money the entire way trying to keep going short. Let's see if we can find one more. Well, let's see if we can find one where price is dropping. 2022 is a good year for price dropping. Low here, there's a divergence there. So price is dropping, RSI going up, right? Higher low there, while we have a lower low on price. This one ultimately did give a bit of a pop. So that's how divergences work. This would not be a divergence where you just have you have a high here and a lower high here, and you have a high here and a lower high here. In that case, they're just confirming. So you want to see the opposite. In this case, you have a low here and a low here, slightly lower low there, so no divergence. Here you have, I guess you could say, a little bit of a divergence. You have a low here, a lower low here, but your RSI is staying just about the same level, so you can call that like a slight bullish divergence. Yeah, so that's how divergences work. It's basically when the indicator is going one way and price is going the other way. It could indicate that the price is out of steam, but as we discussed here, definitely not always, simply because when things get a little bit choppier, they tend to, when the RSI, when price gets a little choppier, the RSI will move back toward the middle and out of extreme territory. So the idea of trend ranges was introduced by Constance Brown, and uptrends, she noticed, tend to remain above 40. I've looked at different stocks and assets, and I did find this kind of interesting for a while because they did tend to hold in a range. And then if it kind of broke that range, then it indicated choppier trading or, a potential reversal. So as a general rule, the RSI tends to hold above 40 in uptrends, but it will vary by asset. If you have more volatile assets, that level might be 30. In downtrends, the RSI tends to remain below 60. So it's not really getting anywhere close to that. If the price is moving down in a downtrend, it's not very often getting up to the 70 into overbought territory. It's staying more kind of in that 50 to 60 area, and then it tends to roll over back to the downside. In the uptrends, as the price is moving up, it tends to drop more toward that 40, 50 area and then start moving up. This could indicate pullback areas to buy. Again, I like waiting for a little price action confirmation, but you could look at, RSI. It's an uptrend. It's been moving up to 80 and then dropping back to 40 and then moving back to 80 and dropping back to 40. Maybe those could potentially be buy areas around the 40. In a downtrend, maybe you'd look to sell when the RSI bounces up into that 50, 60 area and has had a tendency to roll back over. It can also just indicate when a trend's no longer acting like a trend, you're moving more into choppy trading, ranging trading, potential reversal. Lots of false signals again as chop develops because that will push the RSI toward 50. It could breach levels even though price may be trending overall. So an example of this would be you have a really sharp move up, right? So you're pushing up toward, let's say, 70, 80 on the RSI. Then it gets a little bit choppy, which is going to bring it back down to, let's say, 50, 60 area. But then you get a couple days of hard selling. Now, all of a sudden, you've dropped to we were already kind of lower on the RSI, and then a couple days of really strong selling, and we might drop to fully oversold. Yet if you look at the chart, we might not even be that far from the high. It was just big up move, a little bit of chop, and then a couple days of selling, and we get to an oversold. So just be aware of that. It's not perfect. They don't always hold the range. That's why I like to look at the price action as well. And it's like, okay, are we still in an uptrend? Does it look like an uptrend on the chart, or is the RSI just kind of giving us an anomalous reading? So let's look at those ranges. And what you can do is, so on your chart, you can change the levels. So this is trading view. So on this RSI band, it's usually going to be, well, it can go right up to the top, but we said it generally is going to hold above 40. Right, uptrends greater than 40, downtrends 60, less than 60. So now you can see this bottom is now at 40 and the top's just up at 100. Changes the perspective a little bit. So let's look how it did. So this is a nice big uptrend. And for the most part, it held pretty close to that 40. Got slightly below it here, maybe 37. But throughout this uptrend, it held, it held that 40 area. It wasn't dropping, routinely pushing up into the 70 area. Like we said, S&P 500 is not going to get up to 100 very often. Most assets aren't. It's pretty rare. But it is pushing up. If you had your 70 still up here, we're pushing it. And that's what you want to see. It's moving up toward oversold. It's holding the 40 area. And yeah, so this was a pretty good indication of, holding its RSI range. And then this is, we have a couple tiny breaches there, and that's what I don't like. It's like, how much leeway do you give it? This is a bigger breach. So it's like, okay, maybe the price isn't acting like a trend anymore. It's a deeper pullback. But then the price keeps going up. And then we get right back up to the 70, which is good in an uptrend. You want to see it moving between that 40 and 70. Gets back down to 40. Maybe consider it a buy point. It doesn't get back up to 70 anymore. It stalls out near the 50 or 60, right? So now that's becoming more, if it can't push up into that 70 area, it's holding more the 60 area. What's that indicative of? That's more downtrending. It tends to hold below 60. And then we enter a period here where, we could change this again. Oops, I need a box. So downtrends tend to hold below 60. How well did that do? Well, a few peaks above it. Ooh, my line's a little bit off. Let's put it at 60 there. So it does peak above it here. Pretty big peak above it there. Yeah. And it's still dropping below 40 though. So that's more indicative of a bear market. Then what happens over here? It starts holding 40 again and moving more up toward the 70 area, more indicative of an uptrend. So we can kind of make it fit. It's not ideal. I have found, the odd asset or stock I'll come across, it seems to fit. But yeah, there's quite a few kind of breaches. So you'd maybe have to tweak the areas a little bit. But it's kind of an interesting concept to see. Like, basically, if price is doing something, how does RSI confirm that? Are there levels that tend to indicate the price is going to, if it's in an uptrend, where is it going to hold when RSI drops? And yeah, we can see it kind of holds in this was a bigger drop, so probably better to be out for that one, right? So it's holding 40, holding 40, holding 40. Drops below 40, can't get above 60, so this is, kind of more indicative of our bear market. Moves back up, starts holding 40 again. This is more indicative of our bull market, right? Because it's holding at higher levels, up near 50 in this case. Dropping back below 40 here. Yeah, so definitely a little choppy. It's a little dicey, but yeah, you can play around with it, see how that works out for you. We could go the other way. So our top of our RSI would be 60, 0, and that'll show you during bear markets. 2022 was a bear market, but even then, yeah, not ideal. We continue to get these kind of spikes out of the range, even though ultimately the price was continuing lower. But this is kind of a nice shift here from all of a sudden we see these higher lows. But you can see why this can potentially happen. It's either a really strong move, right, where the average gains really outpace the average losses. So that kind of gets us up into this, above this 60, even though it's a downtrend. And then as either the price drops or candles get smaller, we move back into the old range. And again here, really sharp move up. Lots of green going on here in this area. So we get the move out, even though ultimately the price continued down. So again, take it with a grain of salt. Do you like these ranges? Do they help your trading in any way? Check it out for yourself based on the assets and time frames you trade. Let's go on to the next thing. Positive and negative reversals. Yes, change of outfit. Had to go do some golfing. Andrew Cardwell introduced these. He was the mentor of Constance Brown, who came up with the RSI ranges. So we have positive reversals and negative reversals. At first glance, these look like divergences, but as we'll see, they're kind of flip divergences in a way. So a positive reversal is when you have price making a higher low and RSI making a lower low. That's a buy signal. The RSI low doesn't go below 30 and price is at a higher swing low. So if you think of that, price is moving up while the RSI moves down. And that's well, let's go through the negative reversal first. RSI, higher high, price, lower high. That's a sell signal. So you have price moving down while RSI is moving up. Higher RSI, or the RSI doesn't get above 70, price at a lower swing low. So yeah, it might sound like, oh, well, that's just a divergence, but it's different. Structurally, they're flipped. So a bullish divergence, RSI has higher lows and price makes lower lows. A bearish divergence, RSI makes lower highs, price makes a higher high. So how I like to differentiate them is that with a positive and negative reversal, you are basing it more off price. You're trusting price, and the RSI is giving you the divergent signal, right? So in this case, a positive reversal, which is a buy, price is making a higher low. So you had a low down here, now you have a low up here. So you're trusting that. That's your buy. And the RSI alongside it is making a lower low. So you had a low here and a low here. So RSI moving down, price moving up. You're trusting the price. Whereas with a divergence, price is moving up, RSI is moving down. With the divergences, most people are trusting the RSI over price. They're saying, price is moving up, but RSI is moving down. Price is going to drop, right? So the thinking is that price is going to follow the RSI, whereas with the reversals, these positive and negative reversals, you're trusting the price more and saying RSI is out of whack, but I'm going to use it as a buy signal, and we're going to continue to get higher lows. So let's look at a couple examples. So this would be an example of a negative reversal. This is a sell signal. So this would be your sell. Right, so you have a high up here, and then you have a lower high. So price is making lower highs, but notice you have a higher high on the RSI. So when this happens, you'd be watching this in real time, and you'd be like, interesting, like we're at a way lower high there. RSI is way up here. So price moving down, RSI moving up. You know, when this starts to roll over, maybe when price starts to roll over, you look at that as a short signal. So that's a negative reversal. That is a sell or a short signal, according to Andrew Cardwell. Again, do your own research, do your own back testing, figure out what works for you. And here is a positive reversal. So notice we're trusting price. Lower a low here, we make a higher low here. So in real time, we'd be watching this and saying, like RSI is getting below that prior low, but price is still above its prior low. When we get the reversal, start to look for along the stipulation for this one that it doesn't get below 30. This one gets down to about 34 or something. That's fine. You can see this is the 30 line. So it's not super oversold or anything. Same with this one. When we're getting this signal, we want it below 70. 70 is way up here. So this whole thing occurs below the 70. So that higher the higher one on the RSI needs to be below 70, and the lower one on the RSI for the positive reversal needs to be above 30. And yeah, so that's an interesting one. You might see it more in individual stocks. There was this one, and I did notice a couple other ones, but they weren't quite as clear and obvious. There were a few other ones where price is making lower lows, but RSI is kind of at similar levels. But yeah, so definitely an interesting one. If you're interested in the RSI, maybe those signals as well. I prefer this one a little bit more myself because I'm a price action trader. I like following price, and I generally trust price. That's how we make money, is off of price. There's no other way to make money except if price moves. So yeah, I like trusting price. I don't really put a lot of trust in indicators. So this one, the indicator is more just used as an entry signal into essentially a trend. We're making higher lows, so that's, bullish price action. Here we're making lower highs, so that's bearish price action. And the RSI is just potentially giving us an entry point into those trends. So that's a look at the RSI, how I use it, and the conclusion. I've opted not to use it. I prefer price action. That's just me. You can do your own back testing. You can do your own studying, and yeah, figure out what works best for you. If you do use it, study when it produces false signals and good signals. Those are the criteria for any strategy. You want to really dig into when it's giving you the best signals. That's context. What's happening around those signals that makes them so good, and what's happening around certain signals which tends to make them lose more often. And that's how we can basically improve on an idea or a strategy or an indicator over time. You'd want to come up with additional entry rules, context, your exit rules. We didn't discuss a whole lot of exit rules. This was more just about some potential ways we can use it to analyze price and potentially get some trade signals, but you would want to look at exit rules. You're going to consider your time frame and market. Does that affect how the RSI, just because the RSI seems to work really well for one market or one time frame, doesn't necessarily mean that it'll work really well in another market or a different time frame. If you want more trade ideas, like I said, I'm more a price action based trader, so if that appeals to you, come visit me at tradethatswing.com. We do have resources on some indicators as well. And yeah, if you want to see more of my videos, hit the like and subscribe button. Happy trading.